Hey everyone, thank you jump back to the Crypto Ods. Please thumbs up the video and subscribe the channel. Today, let's see what news came out and review the market together. The first one, this article caught my attention. This article said, in today's highly uncertain economy, many home purchase deals in the US are being cancelled. In September 2025, and about 15% of home purchases contract were cancelled, an increase from approximately 13.6% the previous year. Many buyers experience cold feet. Concerns about concerns about job security, unexpected costs, insurance, property taxes, repairs, or financing that denies led them to back out. Buyers' confidence in the economy future has declined, and people prefer not to take risk in the final stage of transaction. If this trend continues, it could negatively affect the overall housing market. Fewer completed sales, more homes on the market, and a drop in public confidence, which is mean we are stuck in what feels like a wage price spiral in the US economy. Tariffs have driven up the prices of goods, wages have remained mostly flat, and employment rose sharply in October. Yes, here you are. You can see a huge lays off. And purchasing power is falling, and soon we are likely to see upward pressure on wages, which will in turn push services inflation and production costs even higher. This means commodity inflation and new price hikes are coming. We call them in the economy is a wage spiral. You can search that and read more about that. While the labor market isn't looking good, the Federal Reserve seems uncertain about what to do. Whatever to cut interest rates, start quantitative easing to support the job market, maybe, or focus on fighting inflation. Jerome Powell is stuck between two-way, rating the cut, save the labor market, or keep the inflation, stop the inflation. He didn't know. Either choice risk pushing the economy into the stagflation, which is definitely not good, not at all, folks. Promise. This way will be destroy this economy. They are stuck in this stagflation. Very sadly. Larry Logan stated that she did not support the interest rate cut this week, arguing that current economic conditions did not justify such a move. She said that if another rate cut is considered in December, there must be clear evidence of rapidly declining inflation or the weakening labor market. They need these two reasons for rating the cut in the next meeting. Otherwise, she would oppose that as well. Logan pointed out that the labor market remains balanced and inflation is still above the Fed's 2% target, meaning that future cuts right now could be risky. She also supported uh, halting the reduction of the Federal Reserve balance sheet, which means ending the asset runoff policy. Noting that money market rates remain level, elevated, which suggests that which sorry which suggests that bank reserves may have returned to normal levels. Another interesting point is that Logan believes the Fed should shift its policy focus from the federal funds rate to the repo, repo rate, as she considered the latter more relevant to today's financial conditions. I don't know if these people are asleep or living in another universe. But just look at the list of jobs lost in October, as I show you. You see, it's shocking. Retailers aside, they are getting crushed under the weight of the economy. Do they really think people are the stupid? What a disaster policy! What more data do you need to realize that they are messed things up completely? The people are being squeezed to the limit. Their savings are gone, and they are barely surviving. It's truly heartbreaking. I don't know what they're thinking, what they are need. I don't know why crypto is under pressure right now. 1.22 billion ETF outflows, fair and more. The cryptocurrency market is currently under downward pressure, driven more by sellers than buyers. On-chain liquidity has declined. The total value like TVL and the DeFi protocols has dropped by about 7.94 billion in just a few days. In addition that, roughly 310 million worth of tokens are set to be unlocked over the next 14 days, which would create a further selling pressure. Institutional capital flows into the crypto market have also turned negative. Between October 29 and 30, about 1.22 billion was withdrawn from ETFs. Meanwhile, the Fear and Greed Index sits around 28, indicating that the market is in a state of fear with a, low buying appetite and high counting among investors. The implication of these developments are significant. When liquidity decreases, new buyer activity slows, and selling pressure um, incentivize. This can keep prices lower than expected for an extended period. The outflow of institutional capital signal declining confidence or less attractive outlook for a large investor, which can have a negative psychological impact on the broader market. Currently, funding rates for all major cryptocurrencies crosses all exchange, if you can see, are negative. You see, negative, negative. Most of them are negative, meaning that globally traders overall sentiments is that the market is temporarily bearish or in a fair driven phase. However, here is the professional insight. When the funding rate became deeply negative, the market often reaches a point where it's ready for reversal because everyone is overly fearful, and that's when large buyers step in. Exchanges also don't like playing excessive funding to short sellers. So mean so when liquidity cluster are building around the, you can see, building around the 116 to 120,000 levels, a short squeeze could occur, forcing many short traders out of their positions. Such a sharp upward move is indeed possible. I have a bad news. Here you are. There is a chance we might see another leg down, like 105,000 or 100,000. Yeah, and here's your Uncle Jimmy Cramer just said he expected the markets to see positive rebound on Monday. Oh, here we go again. Whenever Kramer turns bullish, he often ends up being the opposite. Looks like we are in the trouble again, folks. uh, Although on-chain data shows that long-term Bitcoin holders still remain confident, the rising leverage levels in the market and the decline in investor sentiment suggests that this could be the early phase of a broader sell-off. The current Bitcoin cycle is now more driven by market psychology, including positioning, capital flows, and sentiment, rather than purely by technical structure or macroeconomy factors. Maybe macroeconomy wouldn't work right now in this situation, because we got two rate cut and the market didn't any reaction about that. And in less than a week, the total crypto market has lost around 300 billion in value, with Bitcoin accounting for more than half of the decline. About 954 million in the long positions have been liquidated. A clear sign of a bull trap, where the market moved opposite to a trader's expectations. The Fear and Greed Index has entered the fear zone, and the open interest price divergence index has risen to around 10.35%, indicating that leverage remains high even though price have stabilized. Analysis warned that if price momentum fails to turn positive, Bitcoin could drop to the 100 to 105,000 range. Yeah, as I said before about these guys, Uncle Jimmy. Maybe we could drop first. We could drop to 105 or $100,000. Maybe that's reachable. By the way, also the US Federal Reserve has announced the end of its balance sheet reduction, QT, I mean, and the rate cut is on the agenda. Bitcoin prices and US stock indices have not risen. In fact, they have even declined. One key signal is the Coinbase premium gap. The difference between Bitcoin's price on Coinbase, favored by US institutional investors and other exchanges, it has turned negative again, indicating a drop in US institutional demand. Assessments showed that while liquidity may improve after QT ends, Fed Chair Jerome Powell has emphasized that a rate cut in December is not guaranteed, which has dampened market expectations. The economic situation is heading toward deterioration. While reports show positive numbers, the real life gap is enormous. Look at your own situation compared to 2021 during the pandemic. The pressure is far greater now. The market needs a liquidity injection, the Fed needs to take action, and the economy needs a revival. Retailers and ordinary people are being crushed under the current conditions. We are need the quantitative easing actually to revive this economy, this labor market. On the other hand, if you look at the on-chain data, here is an example. If you see, check the value they destroy. Haven't even entered the red zone. You see, first once time we are joined to the red zone at the April 2024. Yeah, you see, but now we are at the lowest level, lowest risk area. Some walls with 100 of bitcoins, I mean 100 bitcoin wallets, they are buying aggressively, while if you see the retails, one bitcoin wallets, you see, one bitcoin holders, I mean, are exciting. Honestly, it's the dumbest and most frustrating phase of the market. You feel stuck and nothing seems to make sense. Okay, let's jump up to the chart. We are at the weekly time frame, and we had a uptrend line above. I initially expected the market to reach around maybe like that 136, but it couldn't get there and got stuck here in a rising wedge. You see this rising wedge? We're stuck in this rising wedge here, which is usually bearish. Honestly, this rising wedge usually bearish. We also have a broadening triangle, as I showed you the yesterday video. and bearish structure are visible right now. You see, we are currently sitting on the critical levels. These ones, I mean, 107 to 110,000. This is the our critical levels right now. There have been multiple touches that held. You see, if you break down from this triangle, the next support around 98,000 or 100,000, which could hold us because it's our super trend and our super trend here. My setting was changed. I don't know why. Let's fix it. Okay, our super trend and our 50 weeks are SMA are there in 96 to 100, like that, in this level. I have to say, losing this level could change our trend positive, our trend, potentially pushing us to around 74. You see, 74,000. Our next super trend critical level be a good accumulation point for one step of Bitcoin buying. Honestly, these days the market is extremely boring. There is nothing to do but be patient. I know it's mentally stressful, and I feel the same way. Remember, the market first gives you a pain, then rewards that pain.